Hello, I'm Asif Farouk of Finextra, and today I'm with Craig Tillotson of Faster Payments and Jeremy Light of Accenture. So thank you both for joining me today. Craig, I'm going to ask the first question to you. Why is FPSL opening up access to faster payments?
The principal reason why we're opening up access is so that we can deliver the real-time customer proposition we can offer to much of the market today to the total market. So how does that play into access? One of the challenges today, if you're a challenger bank or a new bank or a PSP that might not even be a bank and you want to offer a real-time proposition to your customers, there are certain barriers and challenges in getting access to our service. So our challenge is how do we get over those barriers? How do we make it accessible to any institution that wants to deliver a real-time proposition to their customers?
Okay, Jeremy, this question's for you. Why would a payment service provider want direct access? What are the benefits?
The benefits are twofold. One is around the customer proposition and the other is economic. Today there are more faster payments made outside of business hours than during business hours, so that demonstrates that 24/7 capability is essential. And by having direct access you can get 24/7 availability. And the other key point is that with direct access you get guaranteed real-time payments. If you go through a sponsor or another bank, there's an intermediary in the way, and therefore that can degrade the proposition. It's not necessarily real-time and it's not necessarily 24/7. The other point is economic. By having direct access rather than going through a third party, the cost per transaction can be lower.
The economics are important for a PSP, but I think control of that proposition, recognising that customers want to deliver payments really quickly and they want to deliver them at any time of day or night, is an important criteria for you as a PSP in addressing your market desire. So these points are important.
Jeremy, again to you. Why do you think real-time payments is growing in the UK?
Well, I think it comes down to changing consumer behaviour and changing business models and business practices. We're seeing around Europe and the US that banks and central authorities are looking at, what's the business case for faster payments, real-time payments, and do our customers really want this? Whereas here in the UK, we're at least a decade on from there, and it's clear that consumers and businesses are using real-time payments in a multitude of ways. On the consumer side, a lot of it is driven by their experience using smartphones, where they expect to have real information, real time. And on the small business side, we are seeing changing business practices. One example I came across recently is a hi-fi shop that has got rid of its storeroom because it's now ordering goods as soon as a customer makes a purchase. So it will phone up online, order the goods, it will pay for them through faster payments. The supplier will get the money immediately, so it will ship the goods immediately, either same day or next day, either direct to the retailer or to the customer. And therefore the retailer itself doesn't have to have any stock, so it saves a lot on working capital. It's got a bigger showroom because it doesn't have to store the goods. And also you can offer keener prices because it doesn't have to take the risk of having stock. And in that example, that retailer may have written a cheque every month to top up its stock, whereas now, and that would have been 12 payments a year, whereas now it's doing it for every order, which could be several hundreds. So I think those two reasons are the reasons why, or those two examples are the reason why faster payment volumes are increasing, and we see them continuing to increase significantly over the next 5 years.
My sense is that we're sort of asking the question the wrong way around now, which is not why might consumers or businesses need real-time payments? Why would they tolerate anything less? Our lives are increasingly digital. If I send an email, I expect it to get there pretty much immediately. If I send a text, I expect it to get there immediately. If you ask a consumer, how quickly would you like a payment to go through? The answer is, well, immediately. Now, some of that to date has just been, well, it would be more convenient, I'd like to know it's through there. But now we've got a lot of overlay services like Pay'em, which is supported by faster payments, where actually part of the proposition that consumers are getting, which is I want to make a payment to you, I expect to know that it's gone to you immediately, and I expect, frankly, your smartphone to beep in a few seconds to confirm you've received my payment. Anything else sounds increasingly anachronistic in the world we live today.
Okay. Lastly, let's talk about the vendors. What's the benefit for them? What's in it for them? And Craig, that's for you.
Well, let me try and articulate what role we see vendors playing in our access model. So the model we've got is about aggregation of demand for currently small players that might be bigger in future, aggregating that demand through a competitive set of fintech vendors that can take that demand and feed it into the centre of the faster payments world. Now, as a vendor, why might you? I think there's an economic case. Our analysis, and we've been working with Accenture to understand the economics of demand and the cost of supply. There's an increasingly interesting market opportunity there for vendors to provide this aggregation service for faster payments. And actually, the way we look at it, we take a pretty conservative view in terms of growth of the market and the sort of services you can offer. Increasingly, as an aggregator, you could add other services, other payment services, pay-em, etc., to your proposition would enrich it. I think there's also strategic reasons that, as Jeremy's indicated, we're a long way down the learning curve of faster, immediate, instant, 24/7 payments in this market. Yeah. We process more than 1 billion payments a year. Mm-hmm. We're really understanding how it works. To be a vendor, to be part of that ecosystem, with ultimately a faster payment certification that says you're part of this ecosystem, has to be valuable as you look at other global markets, whether it be Europe or certainly the US, where that recognition of the demand for instant payments is growing, and vendors will want to be in there part of that. So I think there's a number of short-term, medium-term and strategic reasons why a vendor should really want to be at the front of the queue of getting involved in the opening up of access in this market.